So now let's look at the components that go into creating a trade plan template. The first thing is direction, and you'll notice that even though a trade has to be one direction or the other, I mean, we're talking single leg trades. Obviously, there are things like iron condors and straddles and strangles that are actually bi-directional, but for now, we do one leg trade. So you can be long or you can be short, and it can be stock or it can be options, but you can only have one thing in your trade plan right now. Um, However, the trade plan itself has the ability to be both long and short. And what that means is it will be watching for the right setup to trigger in either direction. And you can then either go long stock or short stock, or you can go long calls and long puts, depending on which direction triggers. And it's always the first one to trigger. And when we get to repeating, we'll talk about what that actually means. Quantity basis is a way for you to specify the size of your trade in either shares, contracts, or dollars. So, depending on whether you're trading shares or options, quantity is actually going to be that number of shares or contracts, whichever one you are trading. If you choose dollars, then it will allocate that amount of dollars, and based on the price, it will determine the quantity that it can trade. Symbol is obvious. However, if you're trading options, you still put the symbol of the underlying stock here, and the options get selected elsewhere. The other thing to know is symbol, if you are trading stock, can actually be a comma separated list of stocks. So you can make a single trade plan, click create trade plan, and then end up with some number of active trade plans depending on the number of stocks you put in here. So, in one quick button click, you can make dozens potentially of active trade plans looking at different stocks. Data source is typically you're going to want to trade live, but if you're practicing, if you're getting a feel for how to use the platform, simulated gives you virtually random price data. It starts at $100 a share, and it has some trending built in, but it doesn't really move like most stocks. It's pretty aggressive, and so but it does give you quotes that will change, and that can be very useful. Now, if you can trade live data and simulated brokerage, which is basically paper trading. If you want to trade after hours and there's no quotes, you can do simulated and simulated. But typically during market hours, it makes sense to use live data, even if you're trading a simulated brokerage. If you click Tradier, which is the only brokerage we currently support, then you may or may not have multiple accounts. You can give these accounts a nickname, the way I have here, and that's done in the nav bar where you click on the account table. You can actually label or change the name of those accounts and give them these short nicknames. Okay, I'm not going to go into all the details of this in this video, but these are sort of life cycle kind of things about, in fact, this whole area is about the life cycle of the trade plan, and we'll talk more about that. Here's where you specify the instrument. Stock is very simple. You're just trading shares. We'll have another video where we talk about options. Here are the various setups. You can have one setup per trade plan, although that one setup may actually support a number of setups within that. So the setup is kind of like the general strategy. So, for example, I want to trade a bounce off of an EMA, an exponential moving average, or I want to do a trade based on an opening range breakout, or a flag, or a bounce of a price, or a break of a price, those kinds of things. But then inside of those setups, you will find that you can sometimes have multiple configurations in there. So again, there'll be another video for that. Even though a setup may trigger, you can filter that setup. So you may want to filter so that when the setup triggers, you're still going to filter it out if it doesn't meet some other criteria. For example, if the current price is below the first candle of the day that you specify, then maybe you want to reject it. So let's say say the 15-minute candle, if price is below, I'm sorry, this is something important to remember. The filters are pass filters, meaning you want to put, excuse me, the criteria that will allow the setup to go forward. So if it doesn't meet this filter, then it will be filtered out. So if you're going long, then you might want to say it has to be above the high of the first 15-minute candle. And if it's not, then that setup will be rejected. We'll talk more about filters in another video. We then have entry tactics. So this is once you get a setup and it triggers and it passes the filters, then how are you going to actually enter the trade? And we'll have a video where we talk about the different entry tactics, but there are 3 to choose from. And in this case, you can actually have multiples. So you probably don't want to, but it's possible to have both a market order and a limit order and a candle break. There are position tactics. To be honest, nobody is really using them at this point, but one is for scaling in, meaning it's a sort of nice way of saying doubling down, but you can actually specify multiple entry points, and so maybe you put in 33% of your desired position at one price, and then another third at a lower price, and then the final third at another price. So that's one approach. I don't know if anybody's used it, and there may be bugs with this. And then there's add to winner, which is kind of the opposite. It's if the trade is going your way, you can actually add more to that trade. We may have another video on this, but it's so unused at this point that I'm not sure whether we will. Then there's exit tactics, and this is really, in a way, this is what makes Trade Unafraid what it is. I mean, the setups are great and the entries are great, but this is the trade plan. This is the portion of the trade plan that protects your account, gives you that discipline, and will help you to take profits and maximize your gains. So there's a variety of exit tactics. They all work harmoniously together. Well, I should be careful about that, because there are certain things that are target oriented that you can't actually use together, but the software will help you with that. So grab sense is our folksy way of saying that we're going to put targets out there just to take some profits. And I'm not going to go into all the details about these in this video, but I'm just saying grab sense and ratchet bracket are both target oriented, and so is candle magnitude. So you can only use one of those because they would be competing with each other for taking profit. So But the others are actually for protecting gains or protecting you from large losses, and they can all coexist. So you can have different stops at different places, and as price moves, those stops may change or they may just stay static, but they all coexist, and whichever one gets hit first is the one that will close your position. There's also the ability to trade in pre and post market, and but for most people, this is going to be that the open is when you want to start trading, and that is at 9:30 a.m. Once we start trading other markets, crypto and forex and futures, then these things are going to have to change. But anyway, for now, that's the way this is. And that concludes this overview of the trade plan.